Cool. And we are live, and it is Fridays in Fintech. We have a wonderful guest today, Farooq Malik, and he is currently the co-founder and CEO of Rain. Great to have you here, Farooq.
Yeah, great to be here.
Cool. And a little bit about your background. Very interesting stuff. You spent some time in traditional finance. You were also at Lehman for a bit. And what's interesting is you spent time at a bank as well, building out their sustainable finance with the green bond program, which is actually super fascinating. And you were a treasurer and investment officer there?
Yeah.
Yeah, very cool. Very cool. And then after that, you did some other cool stuff, but then you went on to, co-found, you're also at Blue Duck as well. You were on deck with me. And then you went on to co-found Rain, which is doing some really amazing things. But super excited to have you on here. And really the first thing we do when we bring guests on, we ask the hard questions. So first one is, do you prefer pineapple on your pizza?
I had never had a pizza with pineapple on it.
What?
So I don't know if I prefer it. Could be. I might do that this weekend, and then I'll.
Oh my gosh. You've never had a pineapple on pizza? I mean, it's where'd you grow up, by the way? You're from the East Coast, right? Yeah. That's crazy. Were you just like intimidated by it, or are you just like, I just didn't, not the right opportunity?
I don't eat ham, so pineapple goes with the ham on pizza, and so I just never had it. I've had plenty of pineapple. I did pineapple, but never on pizza.
Yeah. Okay. All right, well that's a first. Usually, like it's very divisive on here. And Faraz, he said something pretty funny. Faraz from Affinity, that he loves Domino's pizza. He's like, as a New Yorker, you're not supposed to say those things.
Yeah, honestly, I also like Domino's pizza, so it's must be a
it's good
thing.
Yeah, it hits the spot. I mean, so really, I'm curious to hear your journey, right? You went from Lehman to a bank, and kind of what led you to going into finance, and then also at a bank, and now you're doing some really amazing stuff with digital assets and also infrastructure as well. Would love to hear a little bit of what led you down that path.
Yeah, I mean, so I was at the North American Development Bank, which is a multinational bank that invests in mostly environmental infrastructure. And it's owned by the United States government and the government of Mexico. And when I was at the bank, we worked a lot on, renewable energy projects and environmental infrastructure projects. And I was on the structured finance team there. And then I transitioned into where I got asked to take over the capital markets activity of the bank. And so I moved into the chief investment officer role at the bank. So got to do a lot of really cool green bond stuff, asset liability management, etc. And while I was there, I started just looking around at, what was going on in the capital markets, and just started noticing a lot of inefficiencies in the market in terms of how loans get serviced, how you actually do mark to market, how you liquidate positions, things like that, and started realizing that there might be a better way down the line. And then a couple of years later, it was just still in the back of my head, and I got exposed to what was happening with real world assets and blockchain tokenization, etc. And it started really just clicking in my head a bit that there's an opportunity to really leverage this new type of technology to build better tools and better products for institutional finance. And that's really what got me interested in exploring the space a little bit more. I simultaneously was going through just the idea maze and trying to figure out something, and met my co-founder Charles. And we both decided, hey, maybe we can start working on something just for fun. And we decided that I had this domain name, which I thought was kind of dumb that it didn't exist.
It's the greatest name ever. The Rain, or?
No, we had signinwire.com, which was, I always thought it was dumb that when you sign a document where you have to send somebody money, there's no checkout flow for documents. And so several years ago, I just registered this domain. I was like, hey, at some point somebody should build this. Maybe I'll build it at some point. And so I pitched Charles on, hey, let's build signinwire.com as like just a fun side project just to kind of put something out there and see if people will use it as a micro SaaS business, right?
Mm-hmm.
Hoping to turn it into a bit of a lifestyle software company, but we built it, and pretty soon after we shipped it, a lot of people wanted to use it for safe note generation and startup fundraising, and we added support for that. And then several months later, or a couple months later, we had people reach out and say, "Hey, can you add support for USDC and stablecoins as a way to fundraise for like a startup in the digital asset space or even traditional startups?" And we added support for that. And then just from there, like organically, people started reaching out. They're like, "Oh, are you guys the safe note, like USDC fundraising guys?"
Mm-hmm.
And they asked us, "Hey, I have like a couple $100,000 in USDC or other stables. How do I buy a laptop? Or how do I pay for this airplane ticket?"
Mm-hmm.
And that's how we realized that, wow, like there might be an opportunity in this digital money, digital asset space. And we found this like willing community of people that had millions and hundreds of millions, in some cases billions of dollars, that just couldn't
Wow.
operate the business properly. And so
Yeah.
that's how we ended up finding the opportunity to build Rain.
Yeah. That's super fascinating. And hang on, I'm just gonna check my mic real quick. Sorry about this. Yeah, that's why the gain's all the way up. Much better, much better. And so that's super fascinating. And really, what I think about your business is, CBDCs, and I know in the crypto community people don't really like that stuff, but as that really takes off, you guys are kind of you have a lot of opportunity there as well, right? And as this becomes more mainstream, and also curious to hear your thought where regulators are thinking about it, and what the trends you're seeing in the U.S. versus overseas, and how you guys are playing a part in that.
Yeah, there was an interesting study released by the Bank of International Settlements a couple of months, I guess sometime last year. And they talked about how like over 80% of governments around the world are exploring CBDC or some form of digital money.
Mm-hmm.
And if you think about it, it makes sense, right? I mean, a lot of people don't understand the nuances between the type of money you currently have and what the difference between that is versus digital money. Like, I like to say that we have electronic money. Electronic money is something you can send on, bits and, bobs on the internet. But the reconciliation of that is still happening over mainframe infrastructure several days later or weeks later, and all of that stuff that's happening is electronic. It's not really truly digital because it's not quite programmable like the internet, right? It's like the difference between a 56K modem in terms of throughput and, a T1 line or a high-speed Wi-Fi. And there's meaningfully more data and transactions that you can do when you have higher bandwidth. And it's like this video. Right? This video is being broadcast in its digital form rather than how it used to be broadcast over the airwaves, right? And there's a meaningful difference between the two. So that's essentially how we've seen the opportunity, and it looks like central banks are thinking about things the same way. And when we decided to build Rain, a big piece of this was really about there seems to be a sea change and a paradigm shift happening in money. And central banks seem to know. Regulators seem to know. And businesses don't seem to really know. And banks don't seem to know. And regulators about 4 banks don't seem to know. But everybody above that seems to know. So our bet was, at some point, there's meaningful throughput opportunities that will be available. And at that point, people will need tooling. So how do we build a product and services for a digitally native audience that exists today without having to wait 15 years or 5 years or 20 years, 25 years for regulations and the rules of the road and all of that stuff to come in? Because our thinking is that if we wait, we'll lose. Because if you wait, like you'll lose to people like JP Morgan or, Santander or whoever, somebody that has vast resources that already provides massive amount of tooling and has the time and the resources to wait, right? And if you think about it, it's the same kind of strategy as any other time there's been a paradigm shift, right? The companies that were able to enter the market earlier were able to stick around longer and build a meaningful business. the people that enter the market later typically lost to people that were bigger, right?
Yep.
And we've seen
Yep.
this with Netflix, we've seen this with YouTube. Those two were some of the earliest people on the market.
That's
And they're still
that's a
around.
really good crossover, right? Look at Netflix. I mean, they had that vision, about digital streaming from day one. It's like, all right, cool. And I remember that. Yeah, you as well, right? And you get these Netflix, like, why would I get this in the mail? It's kind of annoying. I mean, I guess it works. Like Redbox is good. Remember Redbox? And it's just
Yeah,
like,
absolutely.
and then
But the
it
difference
took
between
off.
Redbox was is that
Yeah.
they weren't letting you access media digitally, right? Like they
Yep.
were everywhere you were, which
hmm
they thought is what people wanted Netflix for, but really people wanted to sit, at their wherever they're in their den on their computer and say, oh,
Mm.
tomorrow I want to watch, or later this week I want to watch
Yep.
Training Day, and then it comes in your house. So you don't have to really go anywhere. You're getting media access from your home, which is not. They had to do it on the mail because the internet was too slow, but essentially that's what they were providing, and they were accessing a consumer base that wanted to access media from home, right?
Yep.
Redbox, you were already out. They were competing with like Blockbuster, which was you're already out of the house, now you're there.
Yep.
And so, but this has happened lots of other times. Like you go to the UK, one of the largest resellers or one of the largest like sellers of phones in the UK or mobile phones today is a company called Car Phone Warehouse.
Mm.
How do you think they got started? Do you think they waited until everybody wanted a mobile phone to fit in your pocket? No, they were one of the only places that sold car phones. And car phones for a long time were phones for people that were douchebags that drove, like convertibles. And, so
I wish I would have had a
like,
car. I'm gonna get a car phone one of these days and be
yeah,
like,
right. But
that's
these
funny.
businesses were early enough where they were able to start servicing a need with a client base that had the need.
Mhm.
And the product that they needed was something that was the first step of a much larger opportunity that maybe they didn't even realize at the time. But at
Yep.
least for us, we entered this market knowing that there was hundreds of billions of dollars of corporate funds on the blockchain, and those companies were just like any other company in the world. They had employees, they have computers, they have AWS bills, they have to pay for Zoom, they have to pay for Google Suite, they have to pay for airplane tickets. But they can't. Right? So we realized that there was an opportunity for us to get in with this community of people, and then because they have resources, because they have the need, we can start generating revenue and providing a product today. And then regulation and things like that, the rules of the road, all the other things will then slowly come along when they come along.
That I love that. Man, that is such a great little excerpt and how you're thinking about the market, where it's going as well. And one thing I want to say, we had Evan Sopanoff on last Friday, and he is the VP of compliance of capital markets, right? And he was actually all about digital assets. We got a little into it. And what's interesting is, consumers drive this, right? It comes from the consumers, right? First, and then regulators follow and banks follow. It's like, yes, we need to build for this. And so you're having both pressures, right? Where it's like the consumers are engaging. So obviously there needs to be regulations and there needs to be more banks involved. But from the efficiency side of things as well that you talk about is very attractive for businesses, very attractive for banks. It's just super exciting to see how you guys are building it.
Yeah, I mean, we view this as an opportunity for us to kind of get in the game and start building tools with a use case that's digitally native and providing utility, which is, real world native, right? The
Yeah.
point of having money is to spend it on things that you need. If you can't spend it on things you need, it's not money.
Yep. Well, one thing that was interesting, and it's funny the way that you talked about programmable money, and I've heard that multiple times, and something that really made me think was, okay, people with reconciliation building on the Fed, it's like these notcha files, and it's like, no, we're totally flipping the script on that, right? With actually moving value, creating it how for our very good use case, not just something that was built once and then we kind of have to build on top, which is very powerful, right? That's super cool, man.
Yeah, no, absolutely. And we're lucky, right? Like we're not smart. We're lucky because there's other tools and other examples that have been executed successfully, right? Like most countries didn't have landline infrastructure, but yet
Mm.
they have 90% plus mobile phone penetration now because
Yep.
they were able to get to the point where they didn't need to build the base one to get to phase two, right? And then there's countries that don't have access to banking infrastructure. And
Mm-hmm.
instead of going out and getting banking infrastructure, the phone companies are like, hey, why don't we issue you a bank account, right? So there's definitely opportunities to leapfrog technology when you have these paradigm shifts, and you
Mm-hmm.
can think about things from a kind of a new paradigm rather than like a new lens, rather than having to rely on, okay, well, it was done this way before, so I have to build this over here because there's two layers here already.
Yep. Yep. On that note, are there any exciting opportunities that you see in infrastructure, or that, or any trends that you guys are looking into that is really exciting for you guys, and what's to come?
I think one of the most interesting trends that's emerging right now is the dollarization of the world, effectively,
Mm.
where there's massive demand for US dollar products, US dollar stable coins, and a lot of this demand is emerging markets and people all over the world. A lot of it is B2B, much of it is also B2C or consumer to consumer, right?
Mm-hmm.
So there's a lot of activity taking place there. And people would rather transact in dollars because there's a sanctity value, there's um, just more sort of stability.
Mm-hmm.
And we're already seeing this as an emerging asset class. Like there's already almost $150 billion of stable coins in the market today. There's last year there was almost $12 trillion of stablecoin settlement volume. This is very much a trend which is continuing to grow, and it's something that we're really excited about because it's bringing digital money into the hands of more people, and those people are treating it as if it's digital money, which is what it is. And all those people will eventually need tools to use it like regular, right? And that's
Yep.
where we see a lot of interesting opportunities. The other trend which is emerging, which I personally am really excited about, is all of the ways in which you can access like complicated institutional financial products,
Mm.
not to consumers. Like I don't know if unpermissioned access for every complex financial product for people, like just a regular consumer buyer, is actually the right way to do it. But what I'm talking about is, as a company, we can engage with our lenders on the blockchain. We can borrow money on a dollar by dollar basis rather than pulling it down on hundreds of thousands of dollars minimum. We can design contracts that secure the collateral or the cash flows. We can make it so that we don't need a 40-page long or 60-page long legal
Yeah.
contract
Yep.
to give people credit protections. We can actually program it so that it's already there, right? So that's a really exciting kind of behind the scenes stuff that's happening in the space, which we're really excited about. We're very bullish on, and it's going to be interesting to see what happens. I mean, I think about it from the lens of like my previous job, which was accessing some of these tools to make our lives easier for like loan administration, disbursements, etc. And we would have made way more money with the way less sort of human capital outlays if some of these things had existed.
Yeah, it's the whole, the debt reconciliation, debt facilities, that whole, I mean, I just heard just horror stories of people trying to manage that. Like, oh yeah, I mean, they're great. It's just the way it's done. And I know there's some startups focusing on that, but really, how do you kind of just make that, with the use of blockchain, decentralized ledgers, just make that way more efficient? And that's huge, right? You save a couple bips on, billions and billions of transactions. I mean, that's still great. It's amazing.
Yeah. And I think one
Super
of the biggest
exciting.
barriers there, right, has been that there's a lot of people wanting to sell infrastructure, but we're kind of
Mm-hmm.
before the aha moment for a lot of people. So you
Mm.
can't actually sell them a solution if they don't understand the problem they're solving.
Yep.
So one of the things we've been doing behind the scenes is being our own, guinea pig almost by
Mm-hmm.
using our own tech, using on-chain lending protocols, using on-chain repayment protocols, leveraging a lot of that infrastructure to say, hey, we've already done X number of millions of dollars in on-chain borrowing and repayments. This is our repayment infrastructure. This is the tech stack we use. I mean, and again, I used to be in banking, right? So the way people procure technology is, okay, who else is using it? What have you used it for? How much money is this process? And if it's zero, nobody, none, no one's
Yeah.
gonna buy it.
Yeah, exactly, exactly. It's kind of funny, spending a little bit of time in the debt facility space. It's like, okay, like let's look at the loan tapes. Let's see this. It's like, well, you have these really interesting models, but how are they working in the real world and how much volume? Well, it's like, well, we need the money to do that. So it's kind of cool that the startup where just dog fooding your own products, seeing all these flow of funds, XYZ, and then you can actually now build these enterprise case studies where it's like, hey guys, we found using these things, we saved this much time, this many bips. This is how it typically is done, and this is it. And it's really interesting, not in kind of plugging a little bit into generative AI, right? 83% of banks are exploring generative AI solutions, and what's going to happen both with blockchain and generative AI is just seeing these institutional case studies coming out, which is, hey, this actually works. This is proven out. These people experimented, or tested these products. We saw this much savings, this much return, this much time reduction, and then they'll be like, oh wait, yeah, we definitely need to get on it now, because what's going to be driving them.
Yeah, no, for sure. I agree. Right. A lot of it is demonstrating the utility, and then the second piece of it is demonstrating utility to not first movers, and then it's expanding it to everybody that needs it, right?
Yeah, yeah, and kind of what's interesting too, and banks are really leaning into it. It's, I guess you could say, we're in a bull market now. Would you call it that? Ish, getting
I
there.
don't know if I would call it a bull market. I mean, I think that we're calling it a optimistic period in the market,
Yep, yep.
because it's not. I mean, it's not optimistic in every respect, right? I think in blockchain crypto technology right now, people are a little bit more um, excited, right, and more optimistic. I think in fintech land, it's still very much a little bit of a doom and gloom period, right? There's a lot of
Yep.
regulatory challenges that have emerged, so it's not sunshine everywhere. I think it's very much a patchy sky at the moment.
Yeah, yeah. You get these little blips of like, hey, people are still excited, it's still happening, and then regulators are coming in like, hey guys, you need to focus on these things, fix these things, and all that stuff did need to happen. A lot of those corrections did need to happen. People did need to be like, hey, you're not supposed to do this, and we're gonna show you why.
Absolutely.
Yeah, yeah, yeah. Um, but with that, and really, kind of, what do you see? How do you see the U.S. playing a part in digital assets versus other countries, and kind of when are we going to start seeing that progressive, like, hey, um, this is good, this is being used with reputable institutions. I know there's the ETFs, but are you seeing any other use cases or any other, like, what do you see happening there?
Look, I think that it's a very difficult position that regulators are in and
Hmm.
lawmakers are in. I think that there's a lot of interesting technology that's happening. I think a lot of it is being driven by domestic builders and domestic entrepreneurs, and domestic funds, domestic teams, right? A lot of it is also happening globally. So,
Mm.
and the other thing is that there's a larger kind of market activity that's afoot, right? Like crypto is kind of seen as one monolithic element, and inside this one monolithic element, there's bad actors, there's you know people that have a very perverse profit motive, there's other folks that are really interested in technology, there's a lot of people that are looking at building institutional tooling, right? So there's
Hmm.
all sorts of different people in this ecosystem, and many of those folks are building meaningful things. Many of those folks are building things that are interesting from an economic outcome perspective in the short term. And regulators have to figure out, how do we slice and dice this so that good actors have an incentive to continue building, and bad actors have a, disincentive to be bad, right? Or, an incentive to be good. So
Yeah.
it's a very difficult position for them to be in. And at the same time, we also are the world's largest economy still, right? So there is a lot at stake for getting it wrong. So it makes sense that it's going to take a little bit longer
Mm-hmm.
to get here than other places. I think that we should write our Congress people and our regulators and encourage them to make sound decisions that encourage the continuation of American primacy and innovation and
Mm-hmm.
technology. And I think that we should also understand that it is difficult to do it once and get it right.
Yep.
And it's reasonable for it to take some time. And I don't think that we necessarily need to have an adversarial approach to regulators or elected representatives. I think that ultimately, right, they represent the voters and they represent us.
Mm-hmm.
And we should explain to them that there's people building things here which are meaningful and interesting and being done in a compliant manner so
Yep.
that we can, continue developing and being the hotbed for technology for the next generation, right? I think that's really where I think folks have been losing the plot a little bit on both sides.
Mm.
And it's not, oh, regulate or bust or don't regulate, leave us alone or
Yep.
bust. I think
Yep.
it's let's be sensible, let's bring rules, let's have the conversation, and let's try to allow people that are building interesting things the space to continue innovating, knowing that innovative things sometimes don't fall squarely within the rules that you've previously set, right?
Yep. Yep. That's exactly right. And something as well on that, I think regulators, I was talking from someone from the American Fintech Council, and really what happens is regulators, I believe it's in trends, right? It's like, hands off, all these innovators happening, new stuff happening, and then regulators go super hands on, super aggressive. But after that, it's like, all right, let's collaborate. Let's see how we can work together to make this work. And now regulators, different entities are kind of in this state where it's like, how can we work together? We have this new Office of Innovation. We're doing office hours, and it's very fascinating. I think we're going on that thing on a trend upward in that direction. So I think there's a lot of really cool stuff happening on that side.
Yeah, no, I think we're also seeing a lot of things kind of take their logical course, right? Like with the Bitcoin ETF,
Yep.
it took a lot of time, but it got to where it needed to get to be kind of objective in terms of regulation. And then with other things, they'll probably take their course as well. Like, sure, do people have personal opinions and personal kind of views on whether something is good or bad, or, sure they do. But ultimately, there's rules. We're a society of rules. We're a society of laws. Ultimately, the law will prevail, and regulators have the power to change the law if they want it to be something different, right? But
Yep.
that's essentially how, as Americans, that we really have to be optimistic that our rules and regulations and the way that things are set up will ultimately prevail.
Yep. Yep. Exactly. Exactly. I love it. Well, we are coming towards the end of our Fridays in FinTech, and Farooq, so great to have you. But what we love to do here, we always joke around about closed loop systems, and what we do is we give you a little gift, a gift card to a random Midwestern restaurant.
I
And
love it.
I know what's up?
I love it. I'm excited.
Oh yeah. And usually it's pretty random, but I think we might keep this trend going, which is maybe I should get Domino's to sponsor this. But I'm gonna give you a gift card to Domino's because you're like, hey, Domino's has a place, and maybe you'll get to try pineapple on pizza, man.
All right. If you give me a Domino's gift card, I will for sure 100% try pizza on pineapple
Yeah.
pizza, and I'll send you a photo.
Yeah. That'd be great. Well, Farooq, really great having you. Have a great weekend, and thanks so much.
Thank you again. Great to be here. Cheers.
Yeah.